you ready, guys? We are now live with our next panel, private sector and its opportunity to shape central bank digital currencies. We have a panel of 4 very, very important experts in the field. I'm very honored to have you all on board. And also it's a very special day. We're just discussing it. They are very excited, both about consensus new funding round of 65 million. Congrats, Monica. And also because of Coinbase IPO today and well, everything else going on. So Julio, I'm gonna give you the word. Please go ahead and welcome to the 4 of you.
Thank you. Pleasure to be here. Welcome everyone. As Victoria said, everybody's really excited. We were just having the previous discussion on stable coins and the relationship to CBDC. So we'll try to curb this, guys. I mean, everybody has very exciting opinions that we're going to be talking about in a minute. The panel is about a slightly less interesting topic than the IPO for Coinbase, which is how the private sector can actually play a part, right, in the introduction of CBDCs. I will talk about tokenized money a little bit more in general as well here, right? Let's start by introducing the speakers. Just a few words about myself. I'll start first. My name is Julio Fabra. I am the CEO and founder of Adara, technology company that provides CBDC technology to central banks and banking consortiums, most notably to Finality, which we are the blockchain partners for that. Before that, I spent a good 11 years at Santander working on capital markets and technology and innovation and blockchain. I also headed I chaired the Enterprise Ethereum Alliance that some of you may know, and now I'm a full-time entrepreneur and practitioner of all these things. Monica, do you want to go first?
Yes, thank you. Welcome. I'm so excited to be here and to share the panel with all of you. And my name is Monica Singer. I'm based in Cape Town. Can you see the beautiful picture for all of you to admire? And I work for Consensus for the last nearly 4 years. I love working for Consensus. We are inventing the world. We are creating all the blockchain technologies that everybody thought it could not be done. And now to see all the things that are happening so fast, it's like the tipping point. It's like, I told you so. So it's a beautiful time to be alive. And before I joined Consensus, I created the Central Securities Depository in South Africa. I had to convert the physical paper share certificates checks into digital, created the Central Securities Depository, ran it as the CEO for 20 years. And then I read Satoshi's paper and I thought, oops, I think I better do something else. Because Satoshi said, everything we've done is wrong, centralized, you need to decentralize. So that began 4 years ago, my journey to start decentralizing the financial markets, and I'm loving every second. So thank you for having me here, and I look forward to the panel.
Thanks, Monica. I know Monica from many years ago, old relationship with Consensus. Great to have you here. Philip, do you want to go next?
Yes, thank you very much. It's a pleasure to be here. I studied myself a mixture between business and computer science a couple of years ago. Then I did my PhD in Munich, and then I also founded a couple of companies and afterwards joined the Frankfurt School as a professor, where I now founded the Blockchain Center 4 years ago. We are trying to push blockchain from a community perspective. We are working on topics in the area of digital euro, crypto assets, tokenization, and we are not just reporting what other people are doing. We are also deeply involved in a couple of projects which works at this point of time quite well. And I'm very happy to talk about this topic today with regard to the digital euro and potentially also crypto assets as a carrier platform, so to say. And therefore, it's a pleasure to be here. And I'm very, very optimistic for us here in this ecosystem. We see Bitcoin on the rise, cryptos on the rise, Coinbase, Consensus. Nearly day by day, we have a couple of absolutely fascinating news coming up. So it's a good time and good space to be here.
Wonderful. Great to be together again, Philip. And then Dean, do you want to go last, please?
Yes, thanks, Julio. First of all, thank you for inviting me to this great panel discussion. Thank you, Victoria, as well. I think what we are now seeing, we're seeing a great event developing, and I'm really happy to be part of it. So my name is, as you said, Dean Demelwick. I am a digital transformation leader and a blockchain evangelist in BNP Paribas. I am responsible for research on blockchain, digital assets, as well as identifying the new opportunities and market trends. So I don't want to bore you with lots of my background, I would say, highlights, but just to say that I actually joined this, I would say, transformative space in 2013, and I'm really actually enjoying being in this space. And I would like to congratulate Consensus on this yesterday's actually announcement. Thank you, guys. I think you're working on something which will actually benefit the whole society.
That's great. Thank you, Dean. We'll look forward for more announcements from the private world and probably from banks. That would be good. Okay, so let's start talking about then CBDCs, which is the topic of the panel, right? I was thinking, let's first talk about retail CBDCs, right? I would say that so wholesale CBDCs are a little bit different, right? So those are more like digital versus RTGS system. I say this from my heart because we work a lot with Finality, as I explained before in Adara. So let's talk a little bit more about retail CBDCs. I mean by that, those digital currencies that are directly issued by central banks and are made available to individuals and corporates, right? I mean, they could be directly issued by central banks, or they could be issued under tokenized form, but then backed by central bank money, if that makes sense, right? So my question is, what is the interest of the private sector on these, right? And how do you think the private sector is planning to use it, right? To leverage the retail CBDC construct, right? We've been talking about things like leveraging, for example, their programmable nature, right, in order to foster innovation and create new applications and use cases. Monica was talking about the benefit that this could have for financial inclusion, right, in emerging economies as well. And also, based on the news, probably it's also quite interesting to think about the ability of retail CBDCs to become as a means for settlement for crypto and other digital assets as well, right? This could be also a fuel for for developing this market. So let's talk, for example, first about the ability of the programmable nature to and the ability to actually foster innovation in the space. Who wants to start? Maybe Dean or Philip.
Okay, I'm happy to kick off. I would like to start with actually how I see the CBDC. So for me, the CBDC is a catalyst for the digitalization of the financial services and market infrastructure. So, and also it stimulates creation of new products, new services, and business models. So by saying that, actually, I'm trying to picture what are the benefits for banks. I think, as we know, so banks are going through digital transformation. And I think this CBDC address all these three axes of digital transformation for the banking industry. Number one, actually, one axis along where the CBDCs can contribute is bottom line. So that means actually that will improve efficiencies and will actually help them to digitalize back offices. So the other axis is, I would say, user experience. So that what I mean by that actually that so now we will, I would say, see frictionless transactions. So the payment system will be significantly improved by actually being more transparent, 24/7 available, and so on. And the third one that you mentioned, like where the innovation is, actually, I think this is about creation of these new business models. So CBDC actually can by nature, because I hope that this CBDC will be introduced as programmable money, and can be wrapped up in a private sector, I would say, tokens to actually innovate those business models. So how I see personally, I see that they actually adapt. That means actually the banks need to adapt their existing business models. After that, I see invest. I think the banks will need to invest in infrastructure to connect with the CBDC infrastructure. And the third one is actually create, I think, so the creation of these new services. So if you wish, I can give you a couple of examples. Let's say the banks can create, for trade finance, let's say banks can create invoices that self-execute on receipts of goods and services. They can turn invoices into tradable assets, or they can enable actually, I would say, startups to raise a capital by issuing those programmable money rather than issuing equity.
That's great. Philip, you and I have been discussing in the past about potential uses of tokenized money and by extension CBDCs, right, from the private sector, maybe a little bit farther away from the banking world. Would you like to share your thoughts?
Yes, thank you very much. So first of all, let's very quickly define what we are talking about. Basically, we talk about the question whether and how we should get the euro or other currencies, could be the renminbi in China or the US dollar, how to get them on chain, right, on a blockchain system. And why do we want to do this? There are multiple reasons out there. For example, you can move assets around the world at low cost and also at a very high efficiency. Think me sitting here in Cologne, transferring money to the end of the world in, say, South Korea, Japan, somewhere else, and the money arrives there within a couple of seconds. You know, that's the goal. And this is something the current system cannot achieve. You know, that's a fact. And then second, in case we are talking about the euro, we should never, ever have the euro in mind as an own asset, but we should always have in mind that you can do something with the euro. You purchase a security, you sell a security, you purchase and consume a service, or you offer a service, something. So euro is always being paid for something or received for something, right? And in the securities area, when trading stocks, you can see this very nicely. I give away a stock from Tesla and I get back, I don't know, 200 euro, right? And right now you have these assets running on multiple systems. You have the security systems where the securities are being stored, and you have the banking systems where the euro is being stored. And therefore you need to have clearing houses to reconcile these two systems very efficiently. And that's exactly where the problem comes in. You have to deal with risks, you have to deal with timing issues and so on, such that the existence of clearing houses is basically happened over past. You know, we needed them, of course, but with blockchain technology, we do not need to have clearing houses anymore, because this handling can be done very efficiently by the technology, because the function of the clearing house can be executed by a smart contract. And this is the key point out there, where also, in my personal opinion, central banks are approaching the limits of their understanding, so to say, because they are focused on maintaining the euro payment system. They do not really care about what is being done with the euro, whether there is being purchased or sold securities or services or products being consumed or whatever. So our central bank concerns the efficiency of the euro system and doesn't really care about what people do with the euro. But to really understand CBDC in the blockchain context, you have to have in mind what you are actually doing with the euro, purchasing securities, selling them, consuming services, and so on. And if you are having this mind frame, then you ultimately result in the conclusion that blockchain technology does make sense because it's the ultimate technology to run clearing houses in the form of smart contracts on blockchain systems, right? Sweden started with CBDCs. Now they are doing R3 Corda DLT-based prototypes. China started with digital currencies. Now they end up with some kind of DLT. The same is true in Switzerland. The Swiss central bank says that you do not necessarily need to have a DLT, but it does make sense in case you are having other assets in mind. And therefore, I think we need to really push this topic on behalf of Europe, also to maintain our sovereignty over here. And therefore, I think we need to help or push the European Central Bank and central banks in plural to really speed up and really understand what's going on here, because it's not random that China, Switzerland, and Sweden all ended up with live prototypes or large-scale prototypes with DLT-based topics, and therefore I'm surprised every other day that the ECB is still very often not really understanding this point in absolute clarity.
Okay, so both of you naturally started to talk about the implications for the financial industry. You talked about clearing and settlement of securities and trade finance and things like that. One of the other topics that came up in our previous discussions was the possibility to use this as an enabler, right, for new initiatives in financial inclusion, and also on the, you know, as a bridge, let's say, to, or kind of a way to institutionalize the crypto world as well. Monica, what are your thoughts about that? I know you've been quite vocal about that.
Thank you. First of all, I do agree with everybody, what everybody has said. Remember, I came from that market. I was running central securities depository, and I can assure you that the system is broken. Why? Because we allow so many intermediaries, we allow nominee accounts, we cannot move from a 3-day period of waiting for settlement, and we couldn't even link one CSD to another. So trust me, the system doesn't work anymore, and that's why I predicted when I left being the CEO of Straight, that what would actually happen is that companies will not list in traditional stock exchanges unless stock exchanges evolve. But coming back to your question, Julio, very important that people must never forget. The most significant thing that the CBDC retail is going to do to the world is that for the first time, we're going to be able to offer a liability on the central bank that is not cash. So that's why, if you have a look at the reason why Sweden is doing this, is because people in Sweden stopped using cash, and now the only thing that is being used is commercial bank money, which we know has a higher risk than central bank money. So once you offer central bank money, especially in emerging markets, a whole cascade of consequences starts to happen. I don't know if you are aware that in emerging markets, there is no deposit insurance. If the regulators don't regulate the banks properly, the bank goes under, the deposit gets lost. I don't know if you're aware that in countries from Africa, we hardly have banks. And therefore, what happened in Africa, in East Africa especially, the telcos, the telecommunications company, invented a system called M-Pesa, which works into an ecosystem run by the telcos, which is not ideal. Think about it when you have the liability on the telcos, which is a foreign company and is still a corporate. So ideally, this is the chance of a lifetime for central banks to ensure that they can still have an influence on not only a monetary policy, but also to offer to all the people that have been left out of the economy because they couldn't access bank accounts. Many people don't even have a proof of address or an ID to prove you need to do KYC. The whole idea should be that any opening of CBDC accounts below a certain amount should not require a KYC. You should make it so practical that anybody with a phone should be able to open an account and be able to enjoy the benefits of this technology that will give you access to the world. So you could have your own little shop in the corner of the street in the pavement and be able to run a technology e-commerce basis once you get given a wallet, and you can now use this cryptocurrency backed by the central bank their own liability. And we can make it so simple that even someone that doesn't know how to read or write and hasn't even got internet or data can access to this programmable money. And remember, we never must forget that the beauty is not only the decentralization, but all the benefits that the blockchain technology brings, from immutable, it's difficult to commit fraud, a single version of the truth, blah, 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 and programmability. And we can also ensure that we can give privacy, because that's the other thing that people raise, saying, oh my God, you're going to know everything I'm doing. No, you can actually program privacy into the functionality of the CBDC. But I just have to say to the central banks, if you do nothing, you're going to pay the price, because the cryptocurrencies are becoming not just a store of value, but a medium of exchange. And other companies, fintechs, credit card companies like Visa, MasterCard, they're going to PayPal, they're going to make it so easy. What about Facebook? 2.3 billion users. They're going to make it so easy issuing the stable coins or access to cryptocurrencies that people are going to start saying, why am I using fiat? Why am I using a bank? And that, I believe, is the responsibility of the central bank, to bring stability to people and to make sure they are protected in many ways. And this is a chance of a lifetime. And it's not about saying, oh, it's not going to happen, because this technology has a tipping point. And today, for me, it's a tipping point. Coinbase market cap higher than the New York Stock Exchange. Who would have thought? It is so funny. Or the market cap higher than Goldman Sachs. Really, we've been predicting this for years. And if you sleep on it, then it's going to pass you by. So this is my advice to central banks. There's no time to waste. Thank you.
Okay. Now, so specific, I mean, it's difficult to keep the focus on just talking about retail CBDCs now that we're opening so many topics. But what is the, I mean, why should the central bank be the issuer? I mean, what is the advantage or the benefit, right, of having a central bank being the issuer versus, trying to use tokenized cash, for example? Isn't that a way for the private sector to actually get involved, rather than trying to use or leverage the innovation capabilities of which the CBDCs actually become the issuers, right? So what are the differences and the risks or the benefits in different approaches?
Can I give it a first trial?
Yes, please.
So I think there are different monies out there to really use the plural form of monies, and this is already happening now. In case I'm trying to purchase something for my daily life, say a pizza, something like this, then I can use cash. That's basically paper in my wallet. I can use credit card, PayPal. I can use the plastic form of the credit card or my smartphone. I can use PayPal. I can use Android Pay. I can use IBAN. In Germany, we have the EC card, and so on. So we already have right now all kinds of types of euro, and they all work, even though, and probably because they have been issued by a commercial bank, because commercial banks, they are also offering very convenient apps and services such that I actually can use. It's Apple Pay offering to me the Apple Pay service, which really works brilliant. And it's credit cards, which are also delivering a very, very good service. I cannot expect, I think, the ECB to offering a similarly nicely programmed app like Apple or like Revolut or N26. That's not possible. So we need to have private banks in this sector, because they deliver usability apps such that I, as a human being, can actually use it. And despite multiple euros being there, it's always the euro. It's always the euro from the ECB. It's interoperable. All these monies have bridges for moving money from a credit card to a bank account and back again, and so on. And therefore, to be honest, Julio, I think we will have all kinds of blockchain euros in the future. There will be blockchain euros coming from banks. There will be potentially a blockchain euro coming from PayPal, from Libra, from Diem, and there will be one blockchain euro coming or one digital euro coming from the central bank. But most important, I think the ECB has a good chance, and the central banks have a good chance to really deliver a good solution. But the way they are operating right now is way too slow, and therefore I think we can expect the ECB to launch a digital euro by 2028 or 2026 or 2028 probably. So that's 6 to 8 years from now, not earlier. The question is, what do we do until then in the next 5 years? We can use stable coins. They have exactly the same function. Or we are relying on banks who are issuing the euro as banks to their clients, to their companies, to their users, and so on. And therefore, I think coming from a usability perspective, there will be multiple euros out there from multiple issuers. And then we will see which issuer is basically delivering the best solution such that I, as a consumer, actually can use the euro exactly the same as it's working right now with the multiple forms of the euro, which I also have on my in my wallet or on my smartphone. It's exactly the same stuff, but basically in a digitally transformed way.
Okay. I mean, you have other reactions or what to chip in the discussion, just do, right? I mean,
okay, I will join. Okay, Monica, please.
I just wanted to make a comment from the questions, you know, people, can we think about those that we left behind, that whatever, 1.7 billion people that we left behind. You know, when I made the comment about at certain levels, you don't need a KYC or AML. You know, if you've got a beggar in the street, okay, that nobody now wants to give them money because nobody wants to touch money, nobody wants to touch the beggar, the person is dying. So simply you give them a little card, a QR code, and that account that he opened or she opened can be of a level of, let's say, $100 account that he can have CBDC retail up to $100. He doesn't have to prove proof of address because he sleeps in the street, and he doesn't need to have, an ID, because normally in Africa they don't have IDs. So people, this is a chance for central banks to repair what we did wrong. And you know what? If they don't, I'm sure you heard Facebook say, we are here to save the world from all the unbanked human beings. So is that what you want? So if the central bank in Europe is going to wait for 2028, Philip, by then there won't be a central bank, because who's going to use the euro in its current form? There's going to be so many choices, and I can assure you, even our grandchildren are going to say, what was that, a branch? What is a branch? You know, they're not even understanding, they won't understand the meaning of a bank branch in their language. They're going to say, what? Working hours? What? Public holidays? When? Borders? Nothing. Do you understand that the world that we are building today is not for the baby boomers? I think that we'll never get it. So the problem is that maybe central banks are full of baby boomers that are refusing to give up whatever they built. And you know, whatever made you successful in the past will make you successful in the future. So maybe rather allow the millennials to come and build a new world, because I think that our age group is not understanding this. I'm not being nasty, I'm just being honest, because I am frustrated like you are, Philip, from talking to so many people for many years, knowing this is coming and seeing that nothing's happening.
Okay, I think, I mean, I don't think I fundamentally disagree, or we fundamentally disagree. I think it makes sense to kind of separate a little bit the debate between financial inclusion situations or emerging economies versus Western economies, right? Because in the case of emerging economies, I agree 100% with you that the banking system, the institutional system, has failed, right? And it's very clear. I mean, we've not been able to solve that, right? That is true. So that's a problem of trust, right? Essentially. But in Europe, we cannot say we don't have a good banking system. I mean, people have not been left behind, and payments works. I mean, I can do immediate transfers in SEPA now today if I want, and this works. It could be a little bit more efficient, yes. It could be more innovative, and yes, there is a possibility for programmable money and retail CBDCs to provide new ways to do innovation, right? And that's the path we want to go. But both situations, I think, are very different, right? I'm not disagreeing, just ordering a little bit of debate if possible.
Julio, if I may add here, I think we all agree around the table that here we see CBDC as a new payment infrastructure rather than just a new payment or settlement instruments within existing settlement framework. And I think so when we're talking about this, I think it's very clear that the technology, the distributed technology, blockchain, actually is the kind of infrastructure that enables actually distributed infrastructure for the future. So we need to look at these CBDCs as well in the light of the latest development regarding the native digital assets. Can the CBDC be a kind of bridge between centralized finance and distributed finance? I think that the central banks are not talking about it. So I think what I really actually just they're talking about the two options. One option is like just a narrow CBDC, just as a means of as a payment instrument for settlement. And the other option, actually, I think what we mentioned earlier, what actually our friends actually in Sweden are working on, actually, it's a kind of a new payment infrastructure, which will enable actually those smart contracts, programmability, and so on. And I think looking at this is what I actually said in the future, we need to look at this as a potential actually opportunity to really create a new infrastructure, which has been created, market infrastructure, I mean, which has been created 50 years ago.
Yeah, okay, yeah, I totally agree.
Can I also add that, let's be honest, this is a massive opportunity for the banks not to feel that they're being left out. Because, the model that we believe at Consensus is the two-tier approach. The CBDC gets issued by the central bank, liability of the central bank balance sheet, but it uses the current payment infrastructures, the banks, the payment service providers, the fintechs, the telcos, because they already have that relationship with the clients. Once you establish that relationship, remember, you can then offer them many other services. So this must be seen as an incredible opportunity. And then the last thing I really want to emphasize is that I'm very worried that we are building the DeFi world, the decentralized finance world, and that unless we start educating the man in the street and making it very simple for them to be part of this, that once again, we're going to create a divide between the have and the have-nots, the ones that get the technology and the ones that don't get the technology. And it shouldn't be done like that, because think about it. Look at the evolution of the internet. When the internet started, which I still remember, I'm older than Google. When internet started, we all were scared. We didn't want to send an email. We sent an email, we found the person. Did you get it? But you know what? Today, even your grandmother can use the internet. So that's what we have to achieve. We have to enable that every single human being in the world is able to use this currency. Why? Because it will then open up so many products and services, especially in the DeFi world.
Okay, let's talk about that precisely, right? On one hand, I don't think we can claim that the crypto world has really done a good job in distributing wealth, right? As in, a lot of Bitcoins are concentrated in a few wallets, right? And the same happens with other crypto things. So the have and have-nots, I think, is been. I'm trying to be a little bit contentious, right, Monica, just to create a little bit of debate, right? The debate around DeFi, I think, goes more on the whether this should be regulated or not, or what is the, what is the relationship, let's say, with the regulation world. And actually, we're getting questions in the chat about or comments in the chat about the importance of, what is going to be the balance of power, let's say, when it comes to CBDCs controlled by central banks, and also the implications for KYC and AML. I mean, all the prudential regulation that is needed when dealing with these things, right? So, and setting aside a little bit the let's say the situation in emerging economies, which, as we said, this is very much around the lack of trust in the institutions and the possibility of using new things, because they essentially have nothing, as you very rightly said, Monica. Going back to the other, let's say, the more developed economies, if you want, right, in the retail CBDC world, like Europe, like the digital euro that, you know, Philip, you were talking about, or Kronas or things like that. Do you see? So the question is this an opportunity for banks, or is it a threat, right? In the sense that is this a way to open the innovation? I mean, the ability to do innovation to the private sector, to technology companies, all this. Is that a risk? Is that good? Is that bad? And how this should play out, let's say, with the financial world, which is very narrowly focused. And yes, the idea of fragmenting money in different institutions with very low touch APIs. I mean, it's very difficult to innovate in the financial world. That is true, right? Yeah. So is this a loophole? I mean, is this a way for the the non-regulated world to step into this? And is that a reason? Is that a benefit, or is that a risk? Well, what do you guys think?
Do you want me to start?
Well, as representative.
Julio, yeah, if I can. I see that as a huge opportunity for the banking sector, for financial actually services. The one thing that actually, as you mentioned rightly, it's all about innovation. So what we would like actually now to, so I'm talking from my personal point of view standpoint, that actually I would like to see more search for innovative products that this infrastructure enables. So what I would like to see actually that central banks sit together and create kind of define the scope of this CBDC platform, let's say, and allow private sector, banks, telcos, tech companies to actually to actually think how this is going to actually work in I would say in their terms. So how they will actually help their clients. So I think the most important thing for banks are that their clients actually their advisory. So they need to help their clients with their business challenges. And I see this as a huge opportunity. So I don't want to go into details, but I can say that this actually CBDC platform, as innovative platform, as I said, as an infrastructure, will help banks and financial services to develop the new products that we haven't seen so far. Because as I said, I would like to link this with digital securities as well, that we are at the moment actually developing, so you saw that in capital markets, now you saw that in private markets, those digital equities. And I think that it's a really, really exciting space, and I really see that as a huge opportunity.
Yeah, I could add a little bit of things. I think I would not say that there are banks and there are no banks out there, but I would always focus on the chances for those banks who are speedy, agile, and who are really pushing things. That's where the chances are, and the risks are exactly there, where banks could also be legacy corporations who are slow, who are not very techy, could be partly German automotive manufacturers in the past, right? Who are just wait and see, and then Tesla comes and overtakes them and so on. So the chances are with those who are taking digitization serious, and the risks are those who are sticking with legacy technologies. And then where exactly are the chances? In my mind, there are primarily 4 areas or 5 areas where a digital euro and a CBDC could make sense. One is the digital transformation of the industry. That's business models where everybody would like to have smart contracts, like logistics, supply chain management, production, manufacturing, all this stuff. We know this from all the PowerPoint slides 4 years ago. Then we have the entire capital market sector. That's what Dean referred to. That's securities trading without clearinghouses. Then we have what Monica says, that's cross-border transactions with the potential to financially include 1.7 billion people. And number 4 would be the machine economy, which still yet needs to start. That's basically when machines and devices are being connected to the payment and then starting to transact as things. And finally, we have the crypto market. Don't forget this, because that's right now by far the largest market where digital, not euro, but digital US dollar is being transacted, 100 billion day by day. In my mind, that's the 5 domains. And in my mind, there is really room for banks and for other companies as well to basically get into these 5 domains and build services and products for companies there. And just by naming these 5 domains, I think, it goes through the entire economy. It's industrial production, capital markets, cross-border, machine economy, crypto markets. It's close to everywhere. But of course, you have to identify in which specific field you are launching a product. Yeah. And I think the most fascinating development with regards to CBDC is the US dollar referenced stablecoins, which are really, really innovative and which is not just an idea as with DM, but which is really live and being moved around the world day by day.
And if I may add just one thing, I think absolutely I agree with all what you said. I think this will stimulate competition, which I really like to see that some actually all the, I would say, industry players actually change their mindset instead of a search of efficiency to go and search for competitive advantage. And I think this is where the innovation actually will, I would say, flourish.
And also, Philip, I want to add, for example, anything in the DeFi world, you are now dealing with a smart contract that enables you to get out a loan, that it does automated making of transactions, that it creates insurance products. And that requires this type of digital money to be paid. And you shouldn't have to rely always on crypto like at the moment. So, or stable coins. Why not be able to have a wallet that the central bank gave you, that it taught you how to use it? And then you can go and buy services in the internet, no matter, no walled gardens, no matter where you live, in the middle of the Sahara Desert, doesn't matter. And you'll be able to get a loan without all this red tape. And how sometimes it's complicated to get a loan. So that I think is a key component for me, the DeFi world, because I am seeing, Consensus is, building the decentralized finance world, and what I'm seeing is an implosion of new products and services that I'm just worried once again that we are creating this divide of the ones that get it and the ones that don't get it. And that would be so sad if we don't bring everybody with us.
But Monica, if I may ask one question, blockchain is a very, very inclusive technology, right? It's all open source. You just need to go on the internet, do a little bit of research, and of course, invest a lot of time. But it's an inclusive technology. It's not that heavy software license contracts are restricting my access to this technology. So at some point of time, we also have to rely on everybody else to take up this chance, get into this technology, do a little bit of homework, and basically join this ecosystem. You can't push people in this ecosystem. Yeah, it's more open than anything else I've seen so far.
Yes, however, I'm a professor at a university, and I can tell you that this technology requires education. If you don't educate people on the basics and you don't overwhelm them with a techie talk, just with how to use it, people are very scared. And remember, the user experience is still not happy. Just try to go into take your crypto into cold storage. you have a heart attack that you can make a mistake, or you lose your private keys, who are you going to find? So there are still a lot of problems in terms of bringing this down to the level of the masses. And that's where I'm saying not only is a responsibility of the central bank, that for me is a massive opportunity for the banks, because everybody wants to still be looked after. So the banks can, for example, say, come to me, I'll look after you. I'll do custody, I'll look after your keys, I'll teach you how to do it, I'll show you all the products. It requires education and holding hands, and not everybody's prepared to do this.
Okay. Going back to one of the feasibility questions about all this, and people in the chat are asking about, well, again, the role that the central banks should take, right, in order to create these the CBDCs, retail CBDCs, because somehow it does feel like there is place to do some more regulation, right? And one of the basic implications of that is the need to link retail CBDCs. Well, the need or not, you will tell me, to link retail CBDCs to digital identity, right? So money is something we have today that is anonymous, right? But only 2 or 3% of the money in the world is really anonymous as cash, right? Because the rest is in bank accounts that is printed by banks. And collectively, as an industry, as a society, we spend a lot of money and effort in trying to make sure that the system cannot be inclusive for the criminals, right? The expense of that is not inclusive as well for less fortunate people, which is definitely the drawback, right? So isn't that a big difference, right, between retail CBDCs that somehow will be connected to digital identities versus pure retail assets, pure crypto assets, or other forms of stable coins that would not need necessarily a strong digital identity framework? Or would you actually expect from retail CBDCs to be a way to provide assets without that type of control or that type of attribution to for retail users?
I think a KYC AML is required, and this is where I see the banks actually can bring value as well, because how I see that is we are talking about the blockchain DLT, which is kind of global. So I think we need to see the banks collaborating across continents, between themselves, to create kind of interoperable tech as well with regulators, which I would say will be one vertical, and the other vertical is interoperability between those blockchains. So this is how I see actually that this space, again, infrastructure will develop.
Also, I want to explain to your listeners that we are in parallel to CBDC. We are building what is called self-sovereign identity. This is the evolution of Web 3.0, and this is what Consensus is totally committed, which is the decentralization of the internet and the ability of the human being to keep their own data, and that data not to be abused every time that you share it via. You know who I'm talking about. So the point is that it will run in parallel. You'll see that the new world order will be that you will have your own little cloud with your own data, with your own verified identity, verifiable. Have a look at what the canton of Zug did in Switzerland, and many others are evolving into that point where you are going to have your own identity, and that would be a natural KYC process, AML, and that could be programmed into this cryptocurrencies in a very secure way.
Okay, that makes sense. Something we've not talked about is also the potential implications of CBDCs into monetary policy, right? As towards the creation of new new type of money effectively. There's a question in the chat by from Paul Cisnet to Philip. It says, please also consider the viewpoint of that CBDCs will threaten the position of the US dollar as the world's reserve currency. He says CBDCs equals the end of the Bretton Woods era. Do you have comments, Philip?
I'm not sure if this is really true, because with CBDCs, we are not introducing a new currency, right? We are simply creating a new infrastructure for existing currencies. So therefore, I would not share this thought, actually, because what are we doing here? You know, we are, in the past, we had paper printed on money. Now we are thinking about how do we get money done electronically. Right now, electronic is mostly being offered via commercial banks, and we are now thinking about other ways to use electronic or digital money more efficiently, but it still stays the euro. And in case we will have inflation, then the digital euro would also be inflated as well, right? Therefore, talking about financial stability, I would not agree in any way with many of the others saying that CBDCs are really threatening financial stability. You know, you can sort this out from a technological perspective and also from an other's perspective. I think the biggest risk is basically not taking this serious. It's another risk for not really dealing with this topic, trying to delay it or ignoring it. If we look at China, then we can see that it's already here. China has been creating their digital currency system since 2014, you know, that's more than 6 years. And there are also thoughts out there that they would like to potentially use their payment infrastructure also for Asian countries, other Asian countries except China, and also potential countries in Africa, right? So the Chinese infrastructure also for African monies, right? That's very, very interesting. But given this, I think there are other threats, mainly not taking this topic serious, which are more severe than potential risks with regard to financial infrastructure and stability.
Okay, I think the topic, I mean, the point is even more clear in the case of tokenized money or synthetic CBDCs, right? Like for example, in the case of finality, what we're talking about is a synthetic CBDC in the sense that you put your money into a collateral account, right, which is at the central bank, and then you issue a token that is backed, and essentially it's a claim, right, against the funds that you have in the collateral account, and therefore it's as if it were issued by the central bank, but it's not. It's issued by a prudential risk, a prudentially regulated institution using that. So in terms of monetary policy, there's really nothing, right? You're just taking some of the supply, putting it, and then making it useful, right? Usable on another form, right? It's just about the programmability. So I generally agree with that. The other consideration I would have is that precisely the programmability of CBDCs, particularly retail CBDCs, can also be useful in order to enact new regulation that can actually, help in some regards. Like, for example, if you wanted to fight against tax evasion, or if you wanted to curb concentration of richness. I know I'm sounding a little bit communistic right now, but there was a little bit of a comment in the chat about Jeff Bezos having made more money in 2 quarters than what would be needed for vaccinating the whole world, right? Which is an interesting aspect. Actually, by having the digital assets that are actually controlled by central banks and regulators and the public institutions, any kind of policy around these topics can be much more easily enacted, right? And I'm not saying I'm favoring this. All I'm saying is that at least the technology is going to make this available. I don't know if that is.
And the other one for me that was ridiculous this year last year, to watch how many millions of checks were issued in the US and put in the post. The post doesn't work in Africa. So for us, it was ridiculous. So imagine if you had a CBDC wallet and then the government, the central bank, has to issue some support instantly. that money would be there. I give you an example. In South Africa, we paid to 20 million people social grants. You know how terrible it was to watch old ladies queuing outside the post office in the rain with COVID, waiting to be paid cash. So the risk is that they walk out of the post office around the corner and they get attacked because they're carrying cash. Everybody knows that they've been paid the social grant. All of these decisions don't make any sense anymore when you know we have the technology today to uplift people's well-being. And it can be done very quickly, because the other thing that we must talk about, Julio, is that this technology is very simple to implement. This is not mainframes or Swift messages or complicated, big database in silos that don't talk to each other. This is the internet. It's very simple, it's cheap, there are no intermediaries. Everybody can play with it. We at Consensus have a sandbox that we invite everybody to come and use it and play so that they can learn. So it really just required the willingness to make a difference and to make the changes. And we cannot wait for 2028, Philip. I'm sorry. Please tell the ECB that by then, they're going to be history if they wait for them. The time is now. I hope that everybody gets the same sense of urgency that I have, that this should be implemented as soon as possible.
Okay, yeah, that's great. I think we need to start wrapping up because we're running out of time. There are a couple of questions maybe we can take that Victoria is putting us here. And maybe we'll do some concluding remarks if that is okay, Victoria. Well, one of them is, what's your view on CBDCs being introduced by commercial banks versus it being an official ECB central bank launch? In wholesale CBDCs, I think the answer is relatively straightforward. As you know, we are very, Dara, we're very involved with Finality, and we know the case very well. In this case, the case of Finality, the intention is very clear, right? It's to help banks reduce counterparty risk. Right? Today, a bank would have a lot of VOSTR accounts, a lot of liquidity swamped in the system. And if you can have central bank-backed digital currency that you can use as a means for settlement with other banks, essentially you can reduce the amount of liquidity you need. And that liquidity is going to be central bank-backed, therefore has no counterparty risk. And that has a huge benefit in terms of financial costs, right? So in other words, there is a very clear benefit for the banks in order to foster the creation, in this case, of a synthetic CBDC. And they would be also, it could also be done if it were a direct issuance model as well. But when it's pushed by the industry because of a benefit for the industry, that's where things get really, really quick, right? As we are seeing, obviously, with Finality coming up together. In the case of retail CBDCs, I'm not sure there is a real reason by commercial banks to really push for the creation of this, other than to foster innovation and new payments infrastructures and all that, as Dean was saying, right? I think we're more or less in agreement with this, or would you guys like to comment?
I perfectly agree. It's a very dynamic speed. It's very dynamically developing. We have central banks pushing the topic. We have a couple of commercial banks pushing this topic, and we have some fintech, large big tech companies pushing this. Of course, Facebook with Diem and so on. So it's very dynamic. But I would agree, the retail CBDC is not a concept which is too often emphasized and being developed. That would be my take on this.
Okay. The question was from Sebastian Becker, by the way. Raphael Grilich is asking, I think actually CBDCs are a greater threat to weaker currencies. If transaction costs are low, most people will hold strong currencies and switch to their local currency only at POS or even settle in dollars, euros. So he thinks that CBDC will push dollarization, Euroization. That's a good term. I mean, in the wholesale world, I come from, everything is already dollarized. I mean, there's a lot of payments going on in dollars particularly for large corporates and so on in Africa, in Latin America, in Southeast Asia, and all that. But what do you guys think about this one? Do you think there's a real reason for that, because a real threat for that, or is this actually a benefit? What do you guys think?
Quick reply.
I don't think that is right. I think the central banks actually will limit the amount of foreign CBDCs that the individuals can have on their digital wallet. And this is my quick reply.
Anything that gets limited, it will find another way. So we should go into something else. I'm sorry.
Yeah, but yes, I agree with you. But what I'm saying actually, this is how central banks will manage this. I would say. But on the other hand, actually, so it's a lot of things is involved. What does it mean actually being currency? The main currency, because of so we are talking about other things, not just actually how digitalization of the currency will help a currency to be living currency. So there are lots of other factors.
Okay. The last question was about convertibility prices between digital euros and real euros. I think there will be differences in the wholesale world, but that's a very technical thing. I think for the final, for the retail general public, the difference should be not too easy to appreciate. Anyway, Victoria, I think we've run out of time. Do we maybe have like 20 seconds for each of the?
10 seconds each to say something.
Phil, do you want to go first?
Yes, of course. I think education is key. It's a very inclusive technology. Everybody can come on board. You just need to invest truly significant volumes of time to get onboarded, but then it's absolutely easy to tackle. From the central bank side, I would hope that they are speeding up their ambitions and projects. Alternatively, I would indeed see some kind of dollarization, and this would come through the back door of the crypto assets, because from a perspective of a Bitcoin holder, you would like to have a stable coin. This is the US dollar, but as the Tether, for example, but it doesn't really matter whether you have USDT or Euro, because this is both equally stable when you come from a Bitcoin perspective, right? So therefore, I would indeed see some kind of dollarization perspective, primarily coming from the crypto asset sector.
I also want to say that it requires education, but the most important thing I want to say, people, take 100 euros, open an account, download an app of your favorite exchange, start playing. When you start transferring with your little finger at 3 o'clock in the morning on a Sunday, buying, selling, not phoning anybody, no working hours, and you're doing it on your own, and you learn how to do that, you will never want to go to a bank ever again. Sorry, not to a bank branch. No, you will only want to be digital. So it's experiential. Just don't be scared. Just do it.
You can also wait for consensus IPO. Some people were asking about the timing for that.
We need to finish. We need to finish, guys. Dean, you want to say something?
Just to reiterate that I'd like to see CBDCs as a digital alternative for digital payment system rather than digital substitution for cash.
Thank you. Thank you so much to the four of you. Amazing panel discussion, and I hope to see you around in the chat now. Thank you, guys.